NVIDIA. Remember, NVIDIA has earnings coming out on May 28th after the bell, but 1 week, up 15%. 1 month, up 28.6%. Still down 9%, though, over the last 6 months. That's one of the genesis for what we're looking at here. Earnings coming up in about a week and a half, and a pretty incredible run. It went from out of favor to really in favor now. So what we're going to look at here in NVIDIA is the long call diagonal. Buying the June 6th, again, same exact one. Buying the June 6th, selling the May 23rd, selling next week, the 135, 142 call diagonal. Buying June 6th, selling May 23rd, ahead of that earnings event. The debit there, about $6.65. It's NVIDIA has sold off, so it's down to about $6.15, $6.20 range. So that is the risk on the trade. Whatever the debit paid is the risk on the trade, and you're looking for a move towards the 142 strike. If you look at the expected move for next week, about $7.50. That takes you very close to the 142 strike using that right column on the Thinkorswim platform. So 2 trades on 2 big movers, one bullish, one bearish. In a bullish trade in NVIDIA, still ahead of their earnings coming up on May 28th.
One of the brightest stars of the artificial intelligence AI explosion has been the semiconductor manufacturer NVIDIA. Since January 2023, the stock has increased by more than 800%, and the recent decision by the Trump administration to not implement the so-called framework for AI diffusion may result in further share price growth. In the last days of the Biden administration, the Commerce Department unveiled the Framework for Artificial Intelligence, AI Diffusion, a set of comprehensive regulations that restricted or outlawed the sale of sophisticated semiconductors in the majority of nations, including some friends of the United States. Significantly, by classifying nations into 3 tiers with differing levels of access to American technology, the AI diffusion framework built upon previously enforced export restrictions. First-tier nations, which include 18 close allies like Australia, Canada, France, Germany, Japan, South Korea, Taiwan, and the United Kingdom, were permitted to purchase cutting-edge AI chips without any restrictions. Second-tier nations, which covered the majority of the world, including nations like India, Israel, Saudi Arabia, Singapore, and Switzerland, that were typically friendly with the United States, were allowed to import a restricted quantity of sophisticated AI chips. Third-tier nations, which included nations with arms embargoes like China, Iran, North Korea, and Russia, were not allowed to purchase sophisticated AI chips. The global adoption of AI, which is based on American technology, stimulates growth and opportunity for both domestic and foreign enterprises. That development on a global scale is now at risk. With its unprecedented and erroneous AI diffusion rule, the Biden administration is now attempting to limit access to common computing applications, threatening to stifle economic growth and innovation. The Trump administration decided last week to abandon the AI diffusion rule, which was supposed to go into force on May 15, 2025. According to the Commerce Department, the AI diffusion rule would have damaged diplomatic ties with dozens of nations and hindered American innovation. The Trump administration, according to Citigroup analysts, will instead negotiate export regulations on a nation-by-nation basis. Several American tech firms made agreements with Saudi Arabia during President Trump's recent Middle East tour that would have been restricted or forbidden by the Biden administration's AI diffusion framework. Those firms include AMD, Alphabet, Amazon, and Supermicro Computer, in addition to NVIDIA. NVIDIA and Humain, a Saudi business, will work together to construct AI data centers. InfiniBand networking and 18,000 NVIDIA Grace Blackwell superchips, which combine Grace CPUs and Blackwell GPUs, will be used in the first phase. Humain will also test physical AI solutions using NVIDIA's Omniverse simulation program. Additionally, NVIDIA will work with the Saudi Data and AI Authority, a government organization dedicated to establishing Saudi Arabia as a leader in artificial intelligence worldwide. In order to create a sovereign AI factory, secure data center infrastructure that is not governed by foreign nations, SDAIA will install 5,000 NVIDIA Blackwell GPUs. Crucially, because of the AI diffusion restrictions, many investors had essentially discounted the Middle East as a major source of GPU demand. Because it gives the business access to a new market, The latest revocation is therefore good news for NVIDIA's stockholders. However, NVIDIA continues to face challenges. The Trump administration most recently imposed restrictions on the sale of H20 GPUs to China. When it comes to NVIDIA, Wall Street seems immensely positive. The median target price for the stock is $160 per share, and 87% of the 69 analysts that track the firm have a buy rating. From the current share price of $135, that is an 18% increase. Crucially, NVIDIA's adjusted earnings are expected to rise 46% over the following 4 quarters, according to Wall Street's average estimate. Given that the company has outperformed the consensus earnings estimate by an average of 7% over the last 4 quarters, the current value of 45 times earnings appears to be rather reasonable. Investors with patience who wish to increase their exposure to NVIDIA might choose to purchase some shares now. So, what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Stocks have made an impressive run since the April options expiration, and as optimism around those trade deals seemed to hit a fever pitch, now we're coming to those May options expiration. Are we due for a rebound or a change of pace in our trend here?
Well, it seems like the trend continues to be to the upside, Marley. So that's a really good question. One thing to kind of note as we kind of get through the May options expiration and get into June, June is going to have a lot more volume and a lot more items that are going to be expiring. So usually we see a little bit more fireworks there, and we start to see levels being penned either to the upside or downside going into the June expiration. But today it's actually been pretty good when it comes to the options flow. It's very healthy, and you're seeing a lot of speculative flows out there as well. United Healthcare is one of these stocks that kind of focus on earlier today. Just been seeing a large amount of volume on that stock, as well as Tesla, which is kind of normal. But you are seeing more of this risk on tone in the market when it comes to the equity and the equity option space. So that's actually pretty healthy for this type of recovery that we've seen. But if we're going into the close here, what I'm really kind of focusing on is that 59.60 level. We highlighted this earlier this morning. We got within around 3 points away from it, and we have seen a little bit of a rejection. Some of these candlesticks, as you can kind of see here, maybe suggesting that we are stalling out. Maybe that call wall that we are seeing to the upside here is going to hold for now. And if so, do we see actually a reversal? And if we do see a reversal, I'm actually looking at the 59.30 level, which is still around 20 points away from, around 20 points away from this current level right now to the downside before we actually get into maybe a particular buy area at that 59.15. That's just where you see a lot of put positioning. Not only those that have bought puts, but also those that have sold puts, which is why we highlight some of these levels. But the trend line has been to the upside. Maybe we had a little bit of a flip as well as the trend was moving higher. We had a little bit of the consolidation. Now that area of support may be turning into an area of resistance. But overall, we can see a lot of fireworks into the monthly expiration here, especially a little bit of a rebalancing too with some of these indexes. So overall, this is actually a really healthy day, and it looks like it's going to be a healthy week here. And next week is going to be interesting because we might have a little bit of a follow-up or follow-through type of week, Marley, because we really don't have that much economic data to really shake the markets, if you will. And we have a couple of Fed speakers, but it seems like we've already heard from the majority of the Fed speakers. It doesn't seem like they're providing us any commentary that we haven't heard before. So a calm week will actually allow us to really digest some of this price action here and see if this will actually hold.
If we get that calm week, Kevin, and you mentioned the call wall, what do you think supporting it? Do you think it'll stay there, or do you think that we'll be able to get through that?
Yeah, well, so we will see a little bit of a repositioning after today's expiration. So we'll have new levels when it comes to open interest moving forward. I would actually expect that the 6,000 level will be a very key and strategic area of resistance for the market. When we were kind of moving to the upside before this pullback, 6,000 was a key wall that it took a lot of energy and a lot of news flow in order for us to break through that. Old habits kind of come back every once in a while when you're looking at the option space. And so I would actually look at the 6,000 level as that key area, and that gets us pretty much a stone's throw away from all-time highs here. So for now, 5,900 still kind of on the radar. 6,000, 5,900 are going to be on the radar here. Going into next month's expiration, which we have 4 weeks, right? We have a little bit of time. If there is this JP Morgan hedged equity fund level sitting at that 59.05-ish area, and that was actually an area of resistance for us I believe, Monday, Tuesday, and Wednesday before we actually broke through it yesterday. So that'll be an interesting one too. If we are kind of trading around this range over the next couple of weeks, that position at 59.05 will actually gain a little bit more strength because of the potential exposure that you have because of the unknown with volatility as well as time decay and other factors when you're looking at the options Greeks.
And right now,
there is no indication that NVIDIA's valuable semiconductors are being diverted to the Chinese market, according to CEO Jensen Huang, who also voiced confidence in his company's trading partners. Huang told Bloomberg News on Saturday in Taipei that NVIDIA's customers are aware of the regulations and self-monitoring, and that the company's hardware is too big to be readily smuggled over borders. Its most recent flagship devices, which can have up to 36 processors and 72 graphics processing units, are marketed as multi-million-dollar integrated systems. President Donald Trump has chosen to revoke the so-called AI diffusion guidelines that the Biden administration established to stop supplies to other nations from being redirected to China. No indication of an AI chip diversion has been found. These systems are enormous. You won't be putting that in your pocket or backpack anytime soon because the Grace Blackwell system weighs almost 2 tons, Huang, 62, stated. It is crucial that the nations and businesses we sell to understand that diversion is prohibited and that everyone wants to keep purchasing NVIDIA technology. They so keep a close eye on themselves. Days after accompanying the president's U.S. team to the Middle East, Huang spoke out in support of NVIDIA's hardware trade opening. The removal of the Biden-era regulations will enable Saudi Arabia and the United Arab Emirates to increase their access to NVIDIA's cutting-edge technology and develop their artificial intelligence capacities. When asked if he would now have to give Middle Eastern clients priority, Huang responded on Saturday, "With accurate forecasting, we would be able to build the necessary technologies for everyone." The question of whether any NVIDIA AI chip shipments breach U.S. trade sanctions on China has sparked an investigation in Singapore and is still a hotly debated topic. Huang reaffirmed his opposition to restrictions on trade. Huang praised Trump's new policies and stated that it is completely incorrect to restrict American technology globally. It ought to be making the most of American technology globally. Despite the market's impressive week, several equities continue to appear to be excellent investments. Right now, I'm concentrating on 3: Alphabet, Taiwan Semiconductor, and NVIDIA. Even though all 3 of these stocks have experienced a recent rally, their gains will pale in comparison to the long-term stock performance that awaits them. Graphics processing units, GPUs, manufactured by NVIDIA, are extensively used in applications requiring a large amount of processing power, such training AI models. Most estimates have NVIDIA's market dominance in the data center GPU industry at over 90%, which is an astounding amount. Additionally, NVIDIA's data center sector has brought in $115 billion in sales over the last 12 months. Given that NVIDIA's total sales for the previous 12 months was $130.5 billion, data center build-outs have a significant impact on the company's success. All of the major tech corporations have pledged to make record-breaking capital expenditures in 2025, the majority of which will be used in data center builds, despite investor concerns that these projects may halt. According to a third-party estimate published by NVIDIA, the total cost of data center build-outs in 2024 was $400 billion. By 2028, though, that amount is anticipated to increase to $1 trillion. That's amazing growth, and if it's accurate, NVIDIA's stock still has a lot of upside potential if it continues to dominate the market. Cloud workload migration and AI deployment are still in their infancy. The good news for NVIDIA is that there is still a great deal of data center capacity to be built. In light of this, I intend to purchase and keep onto NVIDIA stock for many years to come. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now, let's dive into today's video.
What do you think is driving volatility, and how is it impacting the expirations, particularly those June ones that tend to be a bit more explosive?
Yeah, so right now, obviously, volatility has been moving to the downside around that 18 to 17 level. I think that's actually very healthy. If you're an intraday trader, you probably don't want to see volatility go any lower than that. option premiums, if you are a buyer, are relatively cheap, which is good as long as you can get these swings of 0.5%, 0.6% on an intraday basis for the S&P 500. There's money to be made there, and there's probably a little bit of enough premium in order to sell premium as well. Once you start crushing below that 16 to that 15-ish area, that's where it becomes a very dull market, and you start seeing these range-bound days of 25 points to the upside or downside, and then try to close flat here. So volatility is actually looking pretty decent. Do I expect volatility to ramp up probably closer to that expiration? I would, but that's a little bit far off right now, and there's a lot that can actually develop between now and then. When you're kind of looking at this market, though, if we continue to see this, the breadth expansion on these up days, it's harder for, especially for bears, to really kind of knock this market down. And that also can keep volatility levels, for the most part, subdued for now. Vol is still cheap. So if you're concerned, nice little rally from the lows. If you're concerned, now might be the time to actually go out and put some positioning on in order to be able to hedge. VVIX is kind of already hit an extreme low level if you're looking at the standard deviation move on a 1-year range. And that's kind of your first indication that volatility, once again, is relatively cheap. And it doesn't take much to move volatility up. It's a lot harder to move volatility lower once you get to that 16 or that 17 level.
So we took a farther outlook as we approach into June, but what specifically is on your radar right now?
Everything. No, what's on the radar for right now is going to be, high yield credit spreads. I think are a really good gauge for us kind of moving forward. To see if there's any type of concerns as we get closer and closer to the next Fed meeting. What's going to be different about this next Fed meeting compared to the last one that we had is pretty much everybody's all in that a cut needs to happen. And so if we don't get that, or we have an adjustment in expectations, that probably will push yields higher. That also probably will push credit spreads higher, and that will also then drive volatility for the equity markets. I'm keeping my eye out on that. But if you look at the sectors that are really kind of performing, these stealth performers out there, mega cap tech is always a sexy thing that people like to talk about, but there's really some constructive charts out there for industrial stocks right now. Even the materials are looking like they're trying to make a little bit of a breakout on the weekly chart, and financials also still look healthy. So just because tech kind of gets the headlines, there's probably a little bit more alpha in some of these other lesser covered sectors because the premiums are relatively cheap, but the realized volatility is actually higher than what's being implied in the options market, and that's actually something that could be a good. And if we see the same thing when it comes to healthcare, I'm not saying that UNH this is a bottom, but you can say that volume candle that we've seen over the last couple of trading sessions for UNH is something to be mindful of here. You start getting some options buyers to come in, you can create gamma squeeze.
Industry experts regard NVIDIA's graphics processing units, GPUs, as the gold standard for training generative AI models. Given that the semiconductor giant has accumulated an estimated 90% or more of the GPU market, that isn't exactly a new conclusion. The more nuanced concept at play here is how precisely NVIDIA gained such a significant competitive advantage. Although NVIDIA does not specifically list which businesses purchase its GPUs, Wall Street is rife with rumors that some of its biggest clients are cloud hyperscalers Microsoft, Amazon, and Alphabet, as well as Meta platforms. I wouldn't be surprised if these Magnificent Seven members were NVIDIA's regular clients, given that these players are projecting spending well over $300 billion on AI infrastructure this year alone. Beyond the usual mega-cap AI names, however, there is another business that is rapidly becoming a top client. Let's examine how NVIDIA's hardware is being used by Elon Musk's new startup, xAI, and determine how much it might be spending on the greatest chip architecture in the market. Musk's xAI is a startup company developing Grok, a large language model, LLM, designed to rival other well-known LLMs like OpenAI's ChatGPT. The construction of a supercomputer to train its AI applications has been xAI's main priority for the past year. 100,000 NVIDIA GPUs were employed in the Colossus supercomputer's early construction. Musk and his group quickly expanded its GPU cluster to 200,000 chips. Musk met with a group of developers a few months ago to discuss how Grok is trained and what the future holds for xAI. It should come as no surprise that he intensified efforts to acquire additional GPUs. He hinted at the time that the next training cluster will be 5 times bigger than what was in place at the time. Stated differently, Colossus 2 would require 1 million chips, which is 5 times the 200,000 chips mentioned before. He projected that this project would cost between $25 billion and $30 billion in total. Colossus 2 might cost more than $40 billion, though, according to a more recent report from Beth Kindig, the CEO and chief tech analyst of the IO fund. Musk's next major project might cost tens of billions of dollars, as Kindig suggests, given that NVIDIA's chips typically sell for between $30,000 and $40,000. The emergence of bespoke silicon is one of the primary issues with investing in NVIDIA at this time. Although all of the hyperscalers currently purchase its GPUs, each is also engaged in internal chip development. There are many reasons to be concerned about NVIDIA's present growth trajectory, especially when you consider that Advanced Micro Devices, or AMD, is rapidly gaining traction in the data center space. Take a look at Wall Street's projected earnings and revenue for NVIDIA for the next 2 years. Even if there may be some indications that the company's growth is slowing down, I would suggest that this is really rather typical for an established company, particularly when faced with more competition. The financial profile above emphasizes the larger point that industry analysts continue to predict NVIDIA's expansion over the coming years. Furthermore, if xAI does end up spending close to the higher end of the predicted total cost I mentioned before, this further demonstrates that the chipmaker may retain some relative pricing power in spite of the increasingly competitive market. These patterns, in my opinion, imply that AMD is still in a unique position, with new clients like xAI ready to take on demand from established clients, even if the cloud hyperscalers start to diversify away from NVIDIA and keep up their current speed. The price-to-earnings, PE, multiple for NVIDIA stock is very close to its lowest level in a year. I believe the semiconductor leader has temporarily soured because to worries about tariffs, export restrictions in China, and increased competition. However, based on the aforementioned projections and Musk's aggressive acquisition of NVIDIA GPUs, the company should have little issue meeting demand. I believe that this is a fantastic time to profit from NVIDIA's stock price movement and get ready to hold for the long haul. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.